Are you thinking about doing a cash out refinance right now? Well, I need you to stop and make sure you watch this video to the very end. I'm going to be covering 3 things that you need to know about a cash out refinance. 1, what exactly is a cash out refinance? 2, why you should do it. And number 3, why you shouldn't do a cash out refi. If this is the first time that you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, and I created this channel because it wasn't too long ago I was just like you, learning the mortgage industry, trying to figure out how to buy my first home, an investment property, and really how to navigate the entire mortgage world. I put out content every single week, so if you like these videos, don't forget to subscribe to my channel, hit the like button and the bell so that way you get notified every week when we put out content. And if you are thinking of buying or refinancing anywhere in the country and you need a second opinion, that's what I'm here for. Make sure to send me an email with your scenario and my team and I would be happy to take a look at it and just to make sure that you are getting a good deal. And before we hop into the video, I want to give a special shout out to Yvette Kelly. She is our commenter of the week. Yvette had mentioned that she is a 55 plus person looking for a beautiful manufactured home in Mountain View Park in Henderson, and she enjoyed the outline and the detail that we had broke down a few numbers as far as what it's going to take to qualify for a mortgage. So if you have a specific scenario, send a comment just like Yvette did, and we will happily do a specific home analysis just for you. So Yvette, thanks for your comment. We appreciate you watching. And now let's hop into the video. So what is a cash out refinance? A cash out refinance is simply when a homeowner accesses their home equity in their property and essentially pulls the money out through a refinance. Now let's hop into my iPad here and I'm going to break down what a cash out refinance looks like. So let's just say someone has a loan balance of $100,000 just for ease of math, but let's just say their value of the home is $300,000. So the difference between the value and the loan balance is our equity. So for this client, let's call him Frank. Frank has $200K in equity in the property that he'd like to take out. So for most of you that are homeowners and you've bought homes over the last several years, you're probably sitting on a ton of equity. In fact, this is probably one of the best periods of homeownership ever. There is record equity across the board. I think there's some crazy statistic out there that I think a third of the homes that are owned free and clear with no mortgage. So shout out to all of you guys that have paid off your house and you're sitting with no mortgage, because that is an awesome thing to have. So now Frank wants to do a cash out refinance. So he would come to a lender like myself and we would essentially run some rough numbers to where we would look at the value of the property less whatever he owes, which is the $100,000. And in most cases, if you're living in your home, you can cash out about 80% of your property value. So how would we figure that out? You take your $300,000, which is our value, and you're going to multiply that by 0.8, which is our 80% loan to value. So we're going to go 80 LTV. That's a mortgage lingo for you guys. Now the loan balance will now be $240,000. So this will be our new loan. Now remember, Frank owes $100,000 on the property, so we still have to factor that in. Now, if we take out his original loan balance of $100,000, original loan, there's about $140K in equity that Frank can tap into. So that's essentially what a mortgage lender is going to look at. Again, these are all rough numbers until you actually proceed with your loan application, because one, we're going to need to get an appraisal done. So usually when we run numbers, we're looking at public sites like Zillow, Redfin. There's a few other sites through some other banks that we have access to that we can run just some rough numbers to get an idea of what the property value is. Most lenders will ask you for a mortgage statement, so that way we can take a look at what your current payment is, and then we can give you a few options as to what the mortgage will look like if you were to take the cash out. Now, with my team, we run that scenario with everybody and we call it a TCA, which is a total cost analysis. Every single lender should be giving you multiple options. Every client that we talk to, we put together at least 3 to 4 options for them to look at. And that's why it's super important that when you are talking to your lender, don't just go off of the first option they give you. And if that's all they can provide you, I would suggest talking to another lender to get a second opinion, because there should always be more than one way to put together a refinance or purchase. And that's why a loan officer should be giving you those options and not just giving you one thing and calling it a day. So in our situation right here, Frank was able to tap into $140,000 of equity in his property, and the new loan balance would have been the $240,000 based off of the appraisal if it came in at $300,000. Cash out refinances are pretty straightforward. One of the reasons why a lot of people do them is, of course, to tap into the equity. Now, what you you do with the money is totally up to you. The most common things that people use the home equity for is to pay off credit cards. They will consolidate debt. They will use the money to buy other real estate or other investments. Some people will actually use it to renovate their house. So there's a number of things that you can do. Some people back in the day when the housing market went crazy, took the money, bought cars, boats, jewelry, you name it, they blew it on stupid stuff. Don't be like that, because you don't want to get yourself into a position like people did back in the day and lost their house. Now let's hop into the part of why you would do a cash out refinance. So like I mentioned, those are some of the most common things as to why you would do a cash out refinance. I just talked to a client yesterday. His name was Jeff. Jeff was looking at doing a cash out refinance because he wanted to put about $40,000 worth of renovations into his property. I even did a cash out refinance on my house and I renovated the entire place, flooring, paint, fixtures, appliances, you name it. I did the whole thing. So that's usually what a lot of people do, which is totally common and excellent because it adds value to the property. When you tap into the equity of your home, you want to make sure that you're using that money for its highest and best purpose. Usually if you can buy other assets that's going to create income for you, that's a great way to do it. Or sometimes you're investing maybe even into starting up your own business. I think those are excellent things to look at. However, like I mentioned a little bit ago, don't use the money and go on a shopping spree. That's the last thing you want to do because you're taking on more debt on your house and you're not going to buy an asset or anything that's going to appreciate or create passive income for you. So that way you don't have to stress about when it comes time to retire. Another thing that you could also look at doing when you do a cash out refi is also removing your mortgage insurance. So it's not always about accessing the equity of the property, but sometimes it's just restructuring the loan. So let's just say in Frank's instance, in this specific scenario, if he had maybe mortgage insurance that he bought or that he had to pay on his loan because maybe he did an FHA loan or something where he had mortgage insurance on his house, as he takes out the equity of the property, you can also look at removing the mortgage insurance. And you could obviously look at shortening up the loan term if you wanted to do that as well. When I looked at refinancing one of my houses before COVID happened, I was actually looking at taking my house from a 30-year mortgage down to a 10-year loan. And the only reason why I wanted to do that was I've paid down my house so much and I wanted to take advantage of the lower interest rates, and taking the loan down to the 10-year period really didn't change my payment much. I think it was increasing by maybe $400 or $500 a month. So I figured, hey, what the hell? If I can get rid of the house, pay it off in the next 10 years, that's one home that's paid off and I have nothing to worry about. However, I kept it on a 30-year. I took some cash out and I used that cash to go and buy 3 other homes at the time. So I felt I'd rather take the cash flow of the other properties than trying to pay off the debt that I had. And at the time, interest rates were at an all-time low. So I locked in my rate on my house at 2.25%, which I'm never going to touch that. And I'll leave that on a 30-year and I'll just pay that house off whenever it comes time to. Now, what are some reasons why you wouldn't want to refinance and do a cash out refi? Well, one of the things that I would tell you is that you have to look at your current situation and what are you going to be doing with the cash? I had a client that asked me the other day about refinancing his house. He was on an FHA loan and his interest rate was at 3.5%. So in his case, his current rate, like I said, was 3.5%. He was on an FHA loan. And part of the reason of why he wanted to do a cash out is he was looking at doing some renovation work at his house. So this specific client needed only $20,000. Now, if we look at today's market, interest rates, as you all know, have jumped up pretty significantly. However, they are still at near record lows. We really got spoiled over the last couple of years with interest rates in the 2s and the low 3s. Now rates today, they're at the 5% range, which is still fair. So many clients that I've talked to recently are freaking out like 5% is the end of the world. 5%, guys, it's not that bad. And I've said this before in other videos. You can actually Google this information and you can look at the history of the 30-year fixed mortgage rate over the last 50 years through Freddie Mac, and it will actually show you interest rates have been higher numerous times throughout those decades. And you could see where did housing prices and values go over time. They've gone up and up and up. The only time they crashed was obviously during the housing crash during 2008 and 9 and 10 and 11, when everything just obviously did not go up during that time. So with this specific client, if he was looking at refinancing today, I priced his loan out and he would have been at about 5.5%. We would have put him on a conventional loan because we were able to get rid of his mortgage insurance, which is one of the things that we wanted to do because on all FHA loans, you have mortgage insurance. So we would remove the mortgage insurance premium. We would give him his $20,000 and he would take a much higher rate at 5.5%. Now, in his case, what I told him to do was, why don't you look at doing a home equity line of credit? Because a home equity line of credit gives you a little more flexibility. In his case, he only needs $20,000. Now, when you do a refinance, you do have to pay closing costs. So that could easily tally up, depending on your loan size, $3,000, $4,000, $5,000, $6,000 just to do a refinance. And in this guy's case, if he paid $5,000 to get 20, that just doesn't sound right to me. So in the case of doing a home equity line of credit or a HELOC, you can access the funds. It's like a credit card, and you actually get checks that the bank will give you to write against your HELOC. So it's like a credit line. Now, the cool thing about it is that you don't have to pay any interest until you draw off of the credit line. Unlike a cash out refinance, the minute we close your deal, you're starting to make payments on the higher loan balance and the new payment that you have. And in this case, interest rate is higher and he's taking out money, which means his loan balance is increasing. So depending on your specific scenario, a cash out refinance may not make sense, but that's why, like I mentioned, your loan officer should be going over a total cost analysis, because mortgages is not a one size fits all. Just because your neighbor got a cash out refi doesn't mean that that's the best solution for you. And just because you see these interest rates being advertised on some of these websites or on TV that just seem too good to be true, most likely they probably are. You should talk to someone that's actually going to break down what your current loan balance and scenario looks like and what are the options, because in this specific case, like I mentioned, it's more cost effective, because I don't want to charge a client $4,000 or $5,000 to take out 20 grand. It doesn't make any sense. And he has the flexibility to pay down the credit line, and then he can use the funds over and over again. When you do a cash out refinance at the closing, you get one check, or the title company wires you money, and that's it. Once you spend the $20,000, that money's gone. The cool thing about a line of credit is that if he spent the $20,000, he can pay it off, he can use it again. And most HELOCs will give you a certain period of time that you can draw on the money, and then after that period is up, then whatever you owe on the credit line is fixed, and you have to start making payments to pay that off. For example, I have a HELOC on one of my properties for about $80,000, and I can run it up, pay it down, run it up, pay it down as many times as I want. So I have access to the funds. Once I pay it off, I have no payment. So if I'm waiting for maybe looking for a real estate deal, or I'm looking for something to take place, I don't have to make any payments if I pay the entire credit line off, which is really cool and flexible, like I mentioned. So with this specific client, like I mentioned, I don't think a cash out refinance would work, because his interest rate on his first mortgage is just so low right now. I'd hate to see someone take on a higher rate if they don't necessarily need to, because there comes a point in the future where interest rates are going to come back down. There's been a lot of talk about there's going to be another refi boom, whether it be in the next couple of years. So if this guy can accomplish his goal with the HELOC, I'd rather see him do that. And then we can obviously look at interest rates at a further point when maybe they stabilize or they come back down and they're a little more sensible for this specific reason and this client to refinance. So remember, if you are thinking about doing a cash out refinance, make sure to look at your options. Don't just jump through hoops to make sure that you get this thing done as fast as you can because you need the money. I get you need the money, but you need to make sure that you make the right decision. Don't be like some of the people that I've talked to that have actually refinanced multiple times because their loan officer did not cover this with them. There was one specific client that I talked to several months ago that actually refinanced twice within a 6-month period, because he refinanced the first time on a regular rate and term refinance where he did not take any cash out, closed on the refinance. And he literally called me 1 month later and asked, Sean, can I refi my house? And I was like, didn't you just tell me you refinanced like a few months ago? And he's like, yeah, but now I need to take some cash out. So now we looked at doing a cash out refinance for him, but he had to pay a closing cost twice. So he took on another almost $10,000 into his equity because he didn't look at the numbers properly the first time. And unfortunately, I did not do his refi on the first go around, which I would have covered with him. So don't just jump to the first offer that you get. Look at your options. And like I always say, if you need a second opinion, you can send me an email to my email below. I'd be happy to take a look at that for you. And don't forget, if you want to learn how to get your mortgage right, you can check out these videos, subscribe to my channel. And my name is Sean Uyehara, and I will see you on the next video.